The Hedgeless Horseman here is July the 11th, 2024. First of all, thanks to the sponsors. Market day seems gold has gone over $2,400, which of course is nice to see. I mean, I don't think it's that far away from the all-time highs again. Yeah, I mean, and that's nothing. It's like $48 from an all-time high, or yeah, from the all-time highs. What's been funny though is, like, you probably noticed this as well. Well, it's not funny, it's not surprising really, but yeah, I mean, gold has basically traded sideways now, but you've seen these like two cascading selling days, one big fat red day, a bit of a dip afterwards. I've seen so, like always, people guessing at all times, especially of course if you're selling a trading service, let's say. I mean, I've seen quite a few bear legs declared and bull legs as well. In reality, it's like, I mean, I've seen a lot of warnings like, yep, you should stay out of the gold space or the gold sector, we're on the way down. You know, you hear that here or here or here or here, and it's like, well, no, it's actually not far off from all-time highs again. It just, in my opinion, goes to show, I mean, the more I look at people trying to guess every single move, I just get more and more comfortable with not even caring about the metals price, really. Because it always comes down to risk-reward. For me, at least. For me, it makes absolutely no sense that if gold is at, whatever, 2,300 or something, and, you know, someone's like, oh, you better sell your gold miners, gold is going to go down, miners as well. First of all, they don't know that, but it's like, you know, it's spoken with authority, of course. I mean, that's kind of how you, if you want people to follow you, etc. I mean, I probably do this as well. You make it, I mean, you make it sound like it's a sure thing. I don't think I do it with that kind of stuff. It's like I say all the time, it's like I never know where a stock is going to go in the short term and all that. I think I have a pretty good idea if something's cheap or not. And of course, that's my only reason to buy something, if it's cheap. And of course, I want the cheapest. And that can be high risk or it can be lower risk, whatever. But now I'm like, okay, good, I didn't sell any. It's like some juniors are higher than they were here, for example, or even here, yada, yada, yada. To me, the risk, which is unacceptable, is if I sell something that I think is just incredibly cheap. Because I fear that in the short term, for a while, it could get cheaper. That to me is like the epitome of dumb greed, kinda. Of course, traders don't think like that because, I mean, they're not stock pickers. Typically, I guess what I'm trying to say is that, I mean, if you're a value investor, a long-term investor, it's like there's pretty much no point in you know, following traders in that sense, because they have a totally different strategy, different playbook, different sell and buy conditions and all that. So it's just basically gonna, in my opinion, gonna lead you astray. Because if you're a value investor, you have to stick to being a value investor. If your reason to buy is if it's cheap, if your reason to sell if it's not cheap, or again, going back to the risk reward, if the risk reward is favorable, you buy and hold. If it's not favorable, or you find something even more favorable, you sell. Has nothing to do really with where you think the metals are going to go in the short term, not even what the chart of the juniors looks like and all that. Because I can't be a quote value investor, long-term investor, and start selling because some people on Twitter are raving about gold is going to correct. Why would I sell something that's pricing in, let's say, $1,600 gold or $1,700 gold? I'm talking about juniors. I don't know if the major miners are that cheap, actually. That's why I don't own them. But I can't sell that because I think gold might go and test 2,100 or 2,200. First of all, I didn't make, right now, if I buy something that's undervalued based on where gold is, I'm not doing a mistake by definition. And even if gold were to correct to 2,100 or 2,000 or whatever, and I paid a price that's reflecting a $1,700 gold price, it still won't even look like a mistake, if you know what I mean. Sure, would the junior, potentially go down? Yeah, of course. If gold falls $200 or $300, I could see gold juniors go down again, even though they shouldn't. But again, that's short term. Do I think we're gonna go to $1,500 gold? No, I don't. Do I think the juniors, gold juniors especially, are already so undervalued that they don't even really need a reason to go much higher? Absolutely, because they're that undervalued. So again, if I sell something that's like, let's say you haven't seen this cheap gold juniors, gold juniors being this cheap since, I don't know, the early 2000s. Why on earth would I waste that opportunity by trying to time the market and trying to trade? That's how you waste a value opportunity. If you're a trader, it doesn't matter if it's cheap or if it's not. You're kind of guessing on what way the next move is going to be. I mean, if stuff was really expensive up here and you still think it's going to go higher, you're going to buy into it. Whereas a value investor, if you have these breakdowns here, for example, from a support, a junior is going to run for the hills. If they see this, I mean, look at how many support touches. Obviously, this is a very important zone. So this, when we saw this breakdown, if I remember correctly, it's like Twitter was riddled with people like, time to sell, this is a breakdown, this is a breakdown. This was the best time to buy since late 2000. Or actually, or Q1 2000. And in this time, this span of time, this was the lowest buy point, for gold at least. Not necessarily for juniors. My point is that if you're a trader, you're going to be selling here. And this was the best time to buy. And that doesn't come naturally, of course, to a trader because it's a breakdown. For a value investor, it's the only thing we care about. If juniors went down a lot during this breakdown, so they went from very cheap to extremely cheap, auto buy. You're not going to mess that up. But if you were listening to traders, they would probably say it's like, oh, gold is in a new bear market. We've had a double top. It's going to go way lower. I mean, you're going to be hearing about, I don't know, $1,500 gold easily, I think. So if you let that affect you, then you're going to sell the lows. And you're not even a long-term value investor. So it's like I have no idea where gold is going to go. I don't think I need it. It's like I'm excited about every single particular company I own. I think about what the news releases are going to be. Because let's face it, I mean, we've seen gold go up without juniors following much. We've seen gold kind of correct here, for example. It's like the juniors haven't followed that much, I wouldn't say. I mean, I guess they're down a bit. My point is, even if you predict some of this stuff accurately, I'm not going to say you can predict it accurately, but like if you look right, you might still get the wrong results. Because I think here, for example, gold hits 2,000 again, and especially here, I think the sentiment in juniors were going down. So they got cheaper and cheaper and cheaper and cheaper. It's like, there was so much belly aching. There's going to be 4 more years of a bear and what have you. But like, if you're a value investor or stock picker, that's the only thing you should focus on, in my opinion. You can have ideas, of course, what metals you really like, what does the fundamentals look like, but those typically play out over years anyway. So just think about it. It's like, okay, if I foresee, I think gold is going to be in an uptrend for the next 5 years, and zinc and copper and whatever. If you can time that, well, if you focus on picking the best companies, the ones you think have a shot of, creating a lot of value. Even if metals went sideways and you had a case that's like created a bunch of value, you're going to be up anyway. It's just that if the metals and sentiment also follow suit to the upside, you're going to make a lot more. I think that's a very good position to be in. Anyway, let's look at some news. First, Nordic announces new warrant incentive program, 3.1 million outstanding common share purchase warrants. They lowered it from 45 cent strike to 36 cent strike. That's a bit lower than the current price. So again, a bit of an incentive. I mean, it's basically like a private placement around the market cap. And this just, I mean, there were quite a few comments over the last weeks or something. People like, I'm holding off buying. I think there's going to be a private placement. And, a lot of people asking, what's the cash position? Well, they recently got around, I think, 2.6 million from the previous two warrant incentive programs. And I think they raised some additional warrant money, like 600,000. So that's around $3 million. And this hopefully raises at least, $1 million. And I think there's even more warrants outstanding that are in the money. So it's like, I think we're looking at $4 million. And again, in Sweden, you can do a 10,000 meter drill program. I think it's very much doable, and more boots on the ground stuff, bot tilling or whatever. So they can have, I think, a very good field season on $4 million. Because let's face it, I mean, some places, let's say in Canada and the US, it might cost you $600 to $800 per meter to drill. If it's around 200, 250, whatever in Sweden, you get more than twice the bang for your buck. So what they can drill, what amount of money First Nordic can drill 10,000 meters with, a lot of other juniors can maybe drill 4,000 or 5,000 meters. So if you're in a discovery play, I mean, bang for the buck and cost of drilling is obviously a huge thing. Because the more you can drill for the same amount of money, the more growth potential there is. Less dilution per meter drilled. Less dilution per ounce discovered and all of that. That's why not only from a development perspective, the infrastructure, but that the drill costs are this low as well in Sweden. It's like, there's not a lot of things I don't like with First Nordic. Especially since I do think it's, you have the margin of safety development play in the Barsele deposit, but you also have this 100-kilometer land package. And if you have some of the sector's cheapest drill costs, I mean, that's absolutely great. If you have an enormous land position, and there's a lot to drill, if you have some of the cheapest drill costs around, I mean, again, that's fantastic. Whereas, like, unfortunately, some of the, let's say, very northern explorers, I mean, they need a helicopter to get out there to get the drills out. So it's like, for a few million, they can drill maybe 5,000 meters. So it's a challenge, especially in a poor market environment where, let's say, access to capital is quite low. Because some of them have really good projects. It's just, again, they are very remote and it costs a lot of money to explore. So it takes more field seasons it takes more money and usually more field seasons because they can't even, drill at most times of the year. So I think here around Barsele, I think you can drill for most months. I think it's just in the spring when it kind of can get very muddy that it's a bit of a hassle. But like theoretically, you can drill year round with some of the lowest drilling costs around. So again, it's hard to ask for much more if it's a drill play. Anyway, Inflection Resources completes 1.8 thousand square kilometers ambient noise tomography survey across portfolio projects in New South Wales. I don't know why I thought this would take months, but they've done the ENT survey on a very, 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 very large portion of their project backed by Anglo Gold. So it's like, I mean, I really hope, because I did some math, I posted it on CEO.ca, just, trying to show by numbers how, in my opinion, ridiculously undervalued Inflection is. There's like, the market is pricing in absolutely no chance that they will find something. I mean, I'm talking like, well, it was a crude calculation, of course, but it's like 0.2% chance per target area that it would amount to something that could be worth $1 billion, and Inflection would get 250 million worth of value. 0.2%. I mean, that's just crazy. One in 500. There is no way, in my opinion, that these guys, I mean, they have the most impressive technical team, I think, of any junior I've seen. Just look at Inflection's team on the presentation and you see that. Plus they get Anglo Gold to invest, and we know there's Cadia, North Parks and Cowell where the belt is outcropping. So it's like, you have some of the best people, you have a major saying we like what you're doing, and the market is pricing in that's like any of the target areas have a 1 in a 500th chance of finding something that could be worth $1 billion. Cadia is worth 10 billion or something. North Parks, I don't know, a few billion at least. I mean, to me, it's just absolutely crazy what pessimism is priced in to the, what's reflected in the current market cap. Because we don't know. I mean, it's not like it's easy exploration. I mean, one reason why they did this experimental A&T survey is because they're finding it hard to use geophysics, especially where the cover rock cover sequence of rocks is very thick. Because if there's like 300-400 meters of cover rock, it can be a hassle to. I mean, let's say if whatever, some survey goes down to 400-500 meters. So it's like, I mean, you get my point. I mean, it's very hard to use that as a tool in that case. You obviously have the geochemistry, like the green rock geochemistry method and all that, but anything that speeds up discovery is obviously a huge value add. And if it proves that the A&T survey not only speeds it up, but it's like somewhat superior to, or let's say at least it works as well as some other geophysical survey that one would use if it was more shallow, a more shallow target area. That would affect the chance of success, pace of success, and all that for every single project or target area. And they got like 30 of them. So this, I mean, if they just if we get a whiff that this A&T survey actually works, that it's a good tool, the whole portfolio would revalue. I think I'm not sure the market would appreciate that, but it's like that's why we have to outthink the market, of course. I mean, or let's put it like this: if the market is pricing in, the odds are, I mean, giving us the odds that's like, oh, it's a 0.2% chance of success. Maybe it's closer to whatever. If it's 2%, that's 10 times better than what the market gives it. Okay, let's say the chance of success goes from 2% to 5% thanks to the A&T. That's that's obviously, tens and tens of times higher than what's priced in by the market. Do I expect the market to all of a sudden do that? No, of course not. Because A, they have a bunch of projects, they have a bunch of targets, and the market never ever discounts multi-asset potential, which is the whole reason why I think this is an absurd bet. Because most of the time, if you have a junior with, like, let's say, I've probably talked about this before. Let's say you have a project or a junior with 10 projects, 1 flagship, 9 peripheral. And you think they have some value. Let's say you think that the flagship project is worth 10 million, now 20 million. The junior is trading for 10 million, and they have 9 other peripheral projects. And you think some of the projects are pretty good, so they're worth whatever, a few million, let's say a couple or a few million each maybe. But let's say it's worth at least 15 million. Let's put it 15. So the value as you see it is like 25 million. It's trading at 35 million. It's trading at 10 million. Then it's obviously very undervalued based on the sum of its parts, right? The problem is that while the market will not make you pay up for the peripheral 9 projects, the problem is that there's no real punishment for the market to neglect the peripheral value. Because if you're not doing any work there, you're not close to selling it, you're not close to monetizing it in any way, and you can't show any of the potential, let's say, then the market can ignore that reality, the value of those peripheral projects, and it cannot be punished, or probably won't be punished for it, because it's not probably going to be a case where all of a sudden the market appreciates all 10 projects and you get a 3-bag or whatever, simply because you saw a value that the market didn't care about, and now all of a sudden they care about it. That typically does not happen. In Inflection's case, the beauty of it is that they're actually testing all these targets. All of these targets has the potential of producing a discovery. They are all live, they are all deadly. So if the market just prices in whatever, a slim chance of Duck Creek, them finding anything at Duck Creek. So let's say it's underappreciating the smoke at Duck Creek for starters, and you get 29 other project areas or target areas for free. Not only is that an insane amount of targets you get for free, and keep in mind they're only looking for tier 1 projects, they're only looking for large projects, they're only looking for $1 billion plus kind of deposits. So the price is huge. They've strictly gone after the target areas based on geophysics where they think there's potential to host a huge porphyry system, let's say. A big one. Okay. So they're looking for tier 1 deposits. They got 30 targets with some chance of hosting a tier 1 copper gold deposit in Australia. You might be paying a bit for, let's say, Duck Creek, but you get 29 other target areas for free, where you don't pay up for it. It's like no chance of success is priced in. Again, it would be a completely different thing if they weren't doing anything on those projects, because market can't really be punished for ignoring and putting such absurd odds, let's say. Because if it's only Duck Creek that's going to be tested, okay, let's say they make a discovery at Duck Creek, the stock goes bonkers. Okay, and maybe it was way too cheap already. So let's say you get a 10-20 bagger based on Duck Creek. Maybe we should have, or let's say a 20 to 30 bagger at the end of the day. But we should have gotten a 10 to 15 bagger because there was enough smoke, and one thinks the market should appreciate that, but it doesn't, so we get rewarded more. Then add the 29 other projects that if they were not drilled, there's no way for the market's, let's say, absurd odds to be punished. Because even if we think the market is totally neglecting the value of those tier 1, let's say, large scale targets, if they are never tested, that's potential that can never become live. Then it doesn't really matter how much value those targets are, or there's not a easy way to punish the market for giving such absurd odds, being poor in the sense of market efficiency. But the market sentiment, the sentiment right now in juniors, does not change the geology. It does not change the fact that Anglo and Inflection are drilling, both phase 1 and phase 2. And if we look at the stock, it's basically traded sideways. So no news have really changed the market cap much more than plus or minus 3 to 5 million. Which, I mean, That's pretty much absurd. But this is why, this is one of those reasons where it's like, I love this sector. I don't know. It's like you cannot ask for a better sector, really. From a again risk reward perspective, if you think more in, again, I'm not talking about trading here. I'm talking about risk reward and probabilities. This sector is so out of its mind at times that it's just absurd. But with that said, that does not necessarily show up every time, because let's face it. If we believe, well, first of all, let's assume that AngloGold and Inflection's technical team are not absolutely brain dead, and that the market right now is totally misevaluating the discovery potential within this huge land package. If Inflection were to not find anything across, let's say, 30 target areas, it's going to look like the market was right all the time. Maybe let's say the stock goes down 50%. At the end of the day, phase 1, phase 2, whatever, nothing at Duck Creek, nothing at every Miamundi, nothing at any of the targets. And people could say, yeah, the market was correct because it was pessimistic. Yeah, it looks that way after you see the result. What if they make a discovery at Duck Creek? What if they make 2 more discoveries? And the stock goes up, I don't know how many times. Then it's easier to make a case that, well, when you think about it, they have such a large land package. You know where the belt outcrops is produced at least 3 kind of world-class porphyry systems. They have whatever it is, 200 kilometers of strike. They have some of the best technical teams we've ever seen. They have a major saying that, hey, we like your approach. We also think there's potential here. You have an A&T survey which appears to maybe actually delineate a porphyry body, and the market did not respond. So in hindsight, in that case, I think we're going to say that, yeah, what the hell was up with Mr. Market? Of course, again, nobody knows the exact odds. So again, we're going to look smart if it's successful. We're going to look dumb if it's not successful. But investing, especially risk reward, high risk, high rewards stuff, it's Schrodinger's cat. Nobody knows what the future is going to be. We can see at the market cap, and sentiment, what have you. What are the market's expectations? The market's expectations for Inflection hasn't changed much, given the share price has gone sideways. Didn't react much to this A&T thing. Is that correct? Again, given what the prices are, how big the prices are they're looking for, how nice the early indications are, that's like it does in fact look like it might be delineating one of these pencil porphyries. And the market adds not even 1 extra percent chance of success at Duck Creek, or the rest of the portfolio for that matter. And it's still pricing in that there's basically no chance they're going to find anything. I think that's the market making an impressive mistake in efficiently pricing Inflection. But again, that doesn't, just because something is super cheap doesn't mean it is necessarily going to work out. Not with this type of stuff, because there is no margin of safety. There is no intrinsic value in the hand. There's no bird in the hand for the market to one day appreciate, let's say, because it's like it's there in a PA or whatever. No, this is all about numbers. And it's simply gonna be that in case of success, maybe we will get a lot higher in terms of reward than we probably should, because the market was giving us a bet that was just too good. It's like, let's say there's a 10% chance they're gonna make a significant discovery. Then this market cap is absolutely not at fair value. 25% of something worth $1 billion is 250 million. That's still higher. I mean, That's still higher than what the market cap is, 16 million. And then we have the problem that there's a span where it's like, yeah, you could find something worth $1 billion. You could find something worth 2, 3, 4, 5 billion as well. So it's like a multi-dimensional Schrodinger's cat. There's success and there's a huge spectrum of what success could look like. And and then there could be, if you have 30 targets, you might get 0, you might get 1, you might get 2, you might get 3, you might get up all the way to 30 possible discoveries. So it's like, I think the market right now is again pricing in an extremely low chance of them making a $1 billion discovery across that 200-kilometer belt. Even Greatland Gold, I think it peaked, and they have, I think, 30% interest in Havieron. They peaked at a 1.3 billion market cap. With a deep deposit. I assume it would be a block cave operation. And they, again, a minority stakeholder, 30%, got valued at $1.3 billion. So we have a sense of what a Havieron type discovery in Australia could be valued at for a minority partner. That's just something nice to think about when you have 30 target areas. And this is a bit on that topic. So Dustin Perry is the CEO of Kingfisher. He tweeted this a few days ago. Fortescue has entered the arena. Fortescue just put together one of the largest tenure positions in British Columbia, staking up to 800 kilometers, 3,576 square kilometers of the Quesnel Arc Porphyry CUAU. The majority of their tenures are covered with Chilcotin flood basalt cover. This part of BC and further west of the Chilcotin Plateau was covered by recent basalt eruptions similar to the Columbia River basalt south of the border. It'll be interesting to see if they're able to see through these basalts where no one has before. Do the Aussies know something that we don't? Maybe they will get fleet space, and they are the ones who... I'm not sure if he meant ANT instead of AMT, but it doesn't matter. It's fleet space that is doing these ANT, that's their tech, which they're doing for Inflection and AngloGold right now, to fly an AMT survey over the belt to model the basalt thicknesses and see if this is even viable. Curious to hear what other porphyry explorers think of this. So think about this for a minute. Fortescue, they're Australia based. They have ground next to, well, they have ground there down there in the Macquarie Arc. So they are probably well aware what's happening at Inflection Resources with AngloGold and their ANT stuff. Okay, so this is a new technology. I mean, Inflection basically is the poster child test case. And Fleet Space Technologies have done a bunch of, PR stuff, and they've included Inflection. So they're celebrating Inflection, like to highlight, and they even have a case study, and that's where you can see this kind of phallic anomaly that looks like a pencil porphyry, which was data taken from Duck Creek. So all of a sudden, these Aussies, this major Australian company, which is involved in the area where Inflection is looking for undercover deposits where no one even bothered to look before. Now they suddenly stake a huge land package in BC where there's basalt cover. It will be interesting to see if they are able to see through these basalts where no one has before. Do the Aussies know something we don't? I'm working on an article on Inflection. It's like, again, if you find a new discovery tool, whatever, obviously you would want large land packages. Because let's say there's an area where it's like, hey, we know there should be, maybe based on the balance of probabilities, 10 porphyry deposits somewhere around here, because where we see the stuff, the belt, whatever, outcropping with no cover rock, there's whatever, 5. And you have twice as large of a land package which is covered. Balance of probabilities would suggest maybe there's 10. So the bigger you stake, if you find a new exploration tool, of course you would want to basically stake every single area where nobody has staked before, because nobody has bothered to look there. So all of a sudden, I mean, that might be prime ground. Because obviously if that area was not covered and it was easy to see through whatever, and stuff was outcropping, it would have been mined, it would have been discovered. At least it would be in someone's hands right now. Especially if it's an area where there's potential for big deposits. So I just find this extremely curious. Yellow, Chilcotin basalt cover. So they basically staked a huge land package, 180 kilometers, which is almost as long as Inflection's ground down in Australia, where they are also staking purely ground with cover sequences. So if no one bothered to look here, and this Fortescue shows up and basically stakes the guts of it, again, huge land position, balance of probabilities, kind of again like Inflection. I'm not saying this is 100% the reason for it, but if nobody in decades, let's say, have bothered to do anything, all of a sudden Inflection shows up down in Macquarie Arc looking for porphyry deposits. All of a sudden a new technology shows up which seems to be actually working in looking deep through cover, where no other geophysical, let's say, service really work. And then you see this. I don't think that's a stretch to say that there might be this might not be a coincidence. This might be on the back of what's happening in down in Australia with Inflection and A&T. Because this is basically what I would do. If I thought there's a new let's say, I mean, now I wish I would have done this, of course. Let's say you come to the realization, hey, there might be a breakthrough in exploration techniques. We might be able to detect or delineate large porphyry bodies underground based on a new seismic survey. Okay, what would you do then if you think, oh, this is something new that happens? And this is all stuff which is in a, let's say, a very prospective area of BC, the Quesnel arc for porphyry CUA. So it's the very same stuff. So this is apparently famous for copper, gold, porphyries. What is Inflection using A&T to look for? Copper and gold porphyries. And now you have a 100 billion major, whatever the market cap is, suddenly show up and just stake 180 kilometers of covered ground where no other geophysical tools have worked. This is exactly what I would like to do if I thought there was a breakthrough. It's the same with, let's say, the shale revolution. Let's say you knew there was a bunch of shale oil. Nobody could do anything with it, so there was no value to it. Nobody cared because, again, if you can't recover it, there's no point. There is no value. It's like if there's gold in the ocean, for example, but it's like, I mean, the ocean isn't. Well, that's hard to own, I guess, but you know what I mean. It's like if you can't recover it economically, if you can't even find it or whatever, there's no value to it. But if when the shale revolution came, all of a sudden, all the prospective ground, all the areas in the US, for example, that had shale oil sands, all of a sudden that became valuable, and that created millionaires and billionaires. Because a new technology came around that unlocked something that could not be unlocked before. In this case, it's not a technology to recover, it's a possible tool to find these porphyry bodies. To me, I think this is, I mean, of course it might be a gamble, but it's like, this is I mean, think about it. Fortescue, that's a huge company. it looks like they're going out on a limb here. And it's like, hey, if this A&T stuff works, this could be worth a fortune. This could be worth a lot for a whatever $80 billion or $100 billion company. I don't know exactly how big they are right now. Okay, sure. Then of course they see that, hey, the price could be huge. This could be revolutionary. If there's even a few % chance that this can work here and we can unlock this, that would be worth a lot. That's worth doing. Well, again, Inflection already has everything of this. This is what Inflection did first. And they are the ones that are using A&T, and it shows, it seems to show that this works. So again, I mean, it's like I'm going crazy. I have no idea what the market is really missing. But I guess it's going to be one of those cases where it's like the market refuses, it's like totally oblivious, doesn't revalue Inflection, and then all of a sudden, let's say they do make a discovery and it's like, yep, every long gets rewarded. The Mr. Market looks super dumb. Just goes whatever to up many times over. I'm not saying it's gonna, I'm saying that could happen. So it could be one of those cases where it's like the market just ignores what's happening there fundamentally for Inflection. Ignores until something bears fruit, and then poof. And all of a sudden we might, as longs, make much more money than we really should, because let's say that Inflection shouldn't be this low to start off with, based on whatever, everything we know about the land package and what appears to be a kind of a vote of confidence that they think this maybe A&T works, and that would make all covered ground with porphyry potential be revalued in the future, and they're the first movers, let's say. District provides corporate update, a lot of stuff here. Field work was conducted on our Viken, Tåsjö, Malgomaj, Österkärlen, Alum Shale mineral licenses. You can read, there's again a bunch of stuff here. Tomtebo and Stolberg base metal polymetallic properties. Drill results from the Tomtebo property are expected to become available by late July. That's not far off. A news release will be disseminated after final interpretations and review are completed. Geological mapping, prospect, and relogging of historical core. Blah blah blah. That's pretty good. I mean, relogging historical. I mean, they're doing the work necessary, because I think there's. I mean, we know Garpenberg. I mean, there's for sure huge potential in the Bergslagen region, and district didn't get anything really for their base metal project. I mean, it was absurd. I think they had a market cap for a while of 5 million. It's like, that is absolutely crazy. But that was also before the right-wing government took over in Sweden, and they become much more pro-mining. So there's been big changes in Sweden, and we have the new EU Mineral Act and all of that, and the war in Ukraine, of course, and the strategic aspect of metals. But Sweden, we have some of the best underground mines in the world. We have some of the best VMS underground deposits in the world. Garpenberg, and we have the Boliden belt and all that. Garpenberg is a cash cow for Boliden. So yeah, I mean, this is, even though the market only cares about huge Viken Alum Shale deposit with uranium, and there's other metals too. This is also, I mean, Boliden is not a small company. So if you get, I think we get 15% of the Stolberg and Tomtebo, 15% of something that Boliden would mine, that could be worth quite a bit. So I don't know what could be the, let's say, company maker. We haven't gotten the vote yet. Well, we haven't had the moratorium lifted in Sweden yet, but this news release states that they believe there's going to be more info on that in H2, basically the second half of this year, which is now. They also announced intention to apply to list on Nasdaq First North Growth Market. This might be a pretty big deal, actually. Sweden is, and I didn't know about this really until I saw an article on Financial Times, I think, talking about Sweden being the envy of Europe when it comes to our stock market. The Swedes, retail people in Sweden, I mean, yeah, everyday people, I think we have the highest investment rate, let's say. We invest more than most, if not all other Europeans in the stock market. And our stock markets are thriving. We had more IPOs than, I think, Great Britain, Germany, and whatever. So Swedes like to invest in stocks. A lot of companies like to list on the Swedish stock exchange because there's a lot of capital slushing around here. Because again, unlike maybe the Japanese who prefer to save their money, let's say, on a bank account, we like to invest. And I would also say that, as is true with Canada, Canadian capital markets, they're kind of, Canadian-centric. Not only is Canada typically a very good mining jurisdictions, but Canadians, I think, put a premium on stuff that's in Canada. So you have the capital markets in Canada, they're listed in Canada, and you have the project in Canada. That comes with more interest than if you were listed in Canada, had a project in Australia, or you were listed in whatever, Australia had a project in Canada, because I don't think Canadians really invested much on ASX, for example. So there's a huge, I think, arbitrage in a sense, based on where you are listed, where you have your project, whatever. And since Canada's capital markets right now are absolute crap, I mean, TSXV is around, its multi-year lows. Their volumes have been kind of record low, lowest since 2003. So Canadians don't even seem to be investing that much. So there's little capital to go around. Meanwhile, the Swedish stock market seems to be doing very well, and we have a lot of very avid retail investors. So if you have the second largest undeveloped uranium deposit in Sweden, you have 3 base metal projects in Sweden, in the Bergslagen region, and people in Sweden at least know about Boliden, for example, and you have them list on the Swedish Nasdaq exchange. It might not happen overnight, but it's like I've looked into some juniors out there, Swedish junior miners, and most of them are crap, but they have like 12,000 different shareholders. Just with my Swedish broker. So you can imagine it's like the people, there are some who probably don't invest on Canadian markets, they don't feel comfortable with it, whatever. Maybe some of their accounts can't even hold Canadian listed stocks. So imagine that, like, it doesn't matter the amount really. I mean, if they list in Sweden and it opens them up to whatever amount of retail shareholders that could potentially buy the stock. I mean, if they don't own the stock because it's been listed in Canada, then they're only potential buyers, not potential sellers. So, and again, I think we Swedes, as Canadians, we're also home-centric. Because I like, for example, I think District Metals is super cool. Same with First Nordic, because they are in Sweden and I'm from Sweden. So I have a higher propensity to invest because the projects are in Sweden. That's just cool to me. So I'm going to be investing more in these projects because they are in Sweden. For me, that they're listed in Canada is not a problem because pretty much everything I own is listed in Canada. But I bet I'm not alone in thinking that, hey, it's pretty cool with a Swedish mining project. And I know for a fact that we have had some real, for some reason Swedes really like to invest in miners. And we also have the Lundin companies. They typically are listed in Sweden as well. NGX, Philo, so there you have some good people have good memories about mining in those cases at least, because NGX is up 2,000% and the same with Philo. Then we have, of course, some shitty juniors, but we have had some real manias. There was an iron ore developer called Northland Resources. That became like a people's stock in Sweden. This was before I even knew anything really about mining. It was listed, the funny thing is actually, it was listed on the Norway Stock Exchange. The project was in Sweden, and there were so many Swedes who invested in that. Everybody ended up losing their money because the developer got bankrupt, or became bankrupt when the iron ore prices fell, and they had problems getting into commercial productions. There was a lot of shit. They even made a documentary on that failure. My point is that for some reason Swedes can get really, really high on mining projects in Sweden. So it's like, I think this, having a Swedish project listing on the Swedish exchange, I don't see any risks to the downside. I only see risks to the upside. But that doesn't mean it's like the first day of trading it's going to go up 100% or something like that. It just means you're opening up the stock to a bunch of people that might never have heard or seen about the company. They found out they are in Sweden. They read news release. They see on news about uranium, and it's like, oh, they hear about District Metals. They check with their broker. Oh, it's listed in Canada. I'm not going to touch that, whatever, or can't touch that. All of a sudden, it shows up on their, that they can buy it on the Swedish stock market. Yeah, I think some could become buyers, and if they don't own it, they can't be sellers yet. Cabral Gold announces appointment of Samantha Shorter as Chief Financial Officer. I'm extremely pleased that Samantha has accepted the position of Chief Financial Officer with the company or qualification experience in Brazil, and with companies that are in production make her an ideal fit for a company as we advance towards completion the PFS on the initial trial mining and heap leach operation at AUCU. I would also like to thank Paul Hansen, the outgoing CFO, who's retiring for his numerous valuable contributions to the company. Paul has consistently gone above and beyond for this company, and we wish him very happy retirement. And then it talks about her resume, I guess. Samantha has worked with companies with international operations, including Brazil, as well as underground mining operations in Mexico. I don't know how I'm going to do, but I would like to make some crude... if I don't want to wait for the PFS, for example, because I think that both Cabral and Altamira, I think their oxide material, the saprolite material, I think that's greatly underappreciated. It would be interesting to imagine, it's like, okay, let's say you have a startup cost of 10 to 20 million and you could produce 100,000 of very high margin gold. That could be worth a lot of money. And for a small investment like that, again, why I think that the saprolite discoveries is why Osisko Gold Royalties invested in them. I think the market is sleeping on that. If I could know beforehand, like I could do my own calculations, like I did with First Nordic, for example, to have a sense of what it could be worth. I find it a bit harder with such a simple heap leach operation. But I guess one could look at Minera Alamos, for example. They have also some of these heap leach projects where it's like very low capex, high IRR. So again, not a big hurdle problem. I think for Minera Alamos is that Mexico and open pit mining doesn't really go together that well at this point in time. Brazil seems to be one of the best places actually to start any mining operations. Magna Mining reports high-grade copper results from the Green Hill project and commences surface advanced exploration. Just some absolute whoppers, barn burners. 5% copper, 0.7% nickel, 12.8 grams per ton platinum, palladium and gold over 15.2 meters, including 11.7% copper, 1% nickel, 5.8 platinum, PGMs and stuff, over 5.2. 50 meters of 20 grams per ton platinum plus copper plus nickel, including, no, this is actually another hole. 2.6% copper, 0.7 nickel, 13 bonanza platinum palladium gold over 6.4 meters. Here you can see some pictures of the bulk sample area. I mean, this is what they do. It's like I almost don't bother reading the news releases from Magna that closely, because I think I've said this before. I have full confidence in the team. They have Dundee as the main biggest shareholder. They seem to be really good at what they're doing. It was them who I think invested a lot in Reunion Gold, and all of a sudden Reunion Gold is going to get taken over. And Dundee invested at much higher prices than now. I think they bought in at $1.8, or at least they added somewhere along those lines. So the current price is much cheaper than what Dundee bought in for, as well as the project being much more advanced. I mean, we're going into mining here. So it's like I have full confidence. They basically, this is what I'm talking about. It's like how much of a difference a good team makes. When you don't have to second guess. It's like you're not sitting there. It's like, oh, are they gonna burn retail shareholders, whatever? It's like, oh, do they know what they're doing? This is a lot of people from FNM Mining, world experts on exactly this. Huge skin in the game. CEO owns a boatload of owns a lot of the company. You have Dundee and other people. It's like very, they don't throw out money like that. So you have all the vote of confidence you could ask for. You have the team you would want. You have skin in the game. And basically every single news release that they put out over the last, since they started out basically, every single one was basically net positive. They're just doing the work, and it's just getting more and more advanced, and they're finding more and more high grade stuff. So it's just this is literally one of those. This is why it's largest or second largest. I don't know, maybe some stock has surpassed it, but it's like the HODL portfolios. I have a lot of Magna in them because it's like the most fire and forget HODL friendly case that's out there. The only shame is that nickel prices are relatively low. But when you get and again, I guess platinum, palladium, but it's like I'm bullish on all those metals over the longer term as well. It's priced in that the metal prices are shit. But it's like, is it pricing in how much copper they have? No, I don't think so. Is it pricing in any kind of rebound in nickel prices? Ever, or platinum and palladium? We know Rick Rule has talked a lot about, he thinks that, and this was a few months ago, it's like, in 2 years I can see, platinum, palladium, or within 2 years I can see nickel and platinum and palladium doing very well. We're not paying for that future at all. Magna is absurdly cheap, I think. It's the most advanced junior. They're going into production with people who have done it before, and given some of the grades they're finding, it's like I don't think the current nickel price is going to be a problem. I mean, it's a polymetallic deposits. They're finding high grade stuff, and they can choose to. They're going to do a new resource estimate as well. It's like, okay, hike up the cutoff grade. Oh, we're going to mine the richer stuff then. And then it's like, maybe, you start with the 2 first years, like you're mining the richer stuff, focusing on that. Then the metals rebound. All of a sudden you make a lot of money, and the medium grade stuff, you make a lot of money on that too. It's like, I mean, Jason said this before. He wants to build up, $1 billion plus company, and he should know. His team should know how much value there is in this, how much money they can make on a deposit like Shakespeare, etc. It's just a breath of fresh air, I was gonna say. I mean, you don't find these type of situations that often. So yeah, it's like, honestly, yes, I think on average gold juniors, I'm actually going to retract that. I think actually nickel juniors might be even. I mean, I think they're even more depressed than gold juniors, maybe. But at the same time, if you factor in how high the gold price is, maybe not. But the sector sentiment for nickel juniors is absolute crap, And unlike the gold juniors, nickel prices are not at all-time highs. So you can kind of, okay, I can see it. The market is pricing in the expectations and the mood right now. Whereas the gold juniors are not even pricing in the current gold price. Still, I think this is one where it's like, okay, if nickel and platinum, PGMs and copper is ever going to be worth anything in Canada, in Sudbury of all places, Magna ought to be very cheap. Hannan doubles footprint of the copper gold porphyry Previsto Central Peru. Meaty news release, you can read it yourself. It's like there is a pattern here of like the more Hannan looks down in Peru, the more they find. And these are, you can see the scale bar, these are absolute huge projects. They might have discovered never before discovered near surface porphyry district in Peru. The more they find, the more they look, the more they find at surface. They have not yet the permits to drill these. But so I think basically, and you can look at the stock. I mean, it's doing pretty well. I mean, it's around 50 million market cap. But I'm talking to the companies, like they are extremely excited about this. And this is, I think, one of those times where it's like, I mean, how often do you find a new near surface porphyry cluster? You don't really, right? I mean, Chile and Peru, there's been huge and insanely valuable porphyry mines there for 100 years, decades at least. And like the Carlin trend or whatever in Nevada, the low-hanging fruit is believed to have been found. The near surface, the outcropping Carlin stuff. Now they're drilling deeper and drilling 1,000-meter holes, etc., to find the Carlin deposits, the blind ones at depth. But this appears to simply be a case where nobody went here and looked. They did, and they're finding, a potential near surface porphyry district in Peru. And we know how big the porphyry deposits can be in Peru, how profitable. I have no idea what value this is going to have one day. I just think this is an insanely, it's hard to call it a sleeper since, I mean, it's not, it's still at 50 million market cap. But it's like, when I talk to management, my impression is they don't think 50 million is anything in the grand scheme of things. Plus they have the sediment hosted stuff with Yogmek. So this is one. Hannan Metals has, I think, huge blue sky potential, and they have a long laundry list of near surface high potential targets to drill. So when they get going here for real, this could become one of the most exciting porphyry exploration stories in the sector. And they have very good people as well in management and backers. So this is, I think, also one of those, you could see it as a fire and forget hodl case. Okay, you buy it, you hold it for 2 years, come back. If they found something, maybe it's up, whatever, a lot. If they don't find anything, you're going to be down. But again, the risk reward from a 50 million in market cap, given what it could be worth to find a near surface porphyry district. I have no idea how much that could be worth. A lot, obviously. Like billions of dollars. So that's, in my opinion, that's like the price that's on the table. There's potential for this to be that they've actually be the first to discover a new, multi-billion-dollar porphyry cluster. Are there any guarantees? No. But that's why, again, from 50 million to that potential future, that's a long gap to fill. And there's no guarantees. It's just that if this ends up being as good as the company hopes, yeah, this could be a swing for the fences, home run kind of thing. But until they drill, yeah, it's gonna be in the background, maybe a sleeper, for example. Last one, BCM. I started to think more and more about BCM. Yeah, I saw this news release 3 days ago, and it's like, oh yeah, I should check up on BCM again. Because I have a list where I write up stuff that's like, remember to revisit whatever company, and BCM was on that list. And now, I just remembered it when I saw the news. So I think this is very enticing. I rewatched some of the videos with Quinton and Sergey, and he goes through some of the geology and all that. So this news basically highlights that they think they have hit the discontinuous distal skarn fingers, which forms around a porphyry deposit, and that's what they've been after, a porphyry deposit. And when you hit 155.4 meters, or 0.66% Cu and 0.12 grams per ton Au, 7.4 grams per ton silver, that's an impressive hole. That is an impressive hole for starters, and they've hit more stuff like 21 meters of. And if you go through the news releases, and it's like they've mentioned that pretty much no hole actually reached the target depth. So I think this hole 8, for example, I don't have any more schematics. I think that ended in mineralization. I think quite a few of their holes ended in mineralization. So I think that's quite interesting. It's like we have no idea how these holes would be if they drilled 500 meters more, because they had problems with the drill contractor had problems. So this is like, in some of these holes, that's the worst case scenario. The assets we have is like how they minimally look. And now, after doing a study with the help of the Colorado School of Mines, they think this is the vector of fluid movement. And TK8, I think that's the red one, had the best intercept. And basically they have this zonation where it's like, okay, they believe this is, it's getting more and more distal. They believe this might be the way. They also think there might be a porphyry here as well, and that this fluid pathway, so it hits up here. The source is coming from south or southwest, and they believe this might also have something because there's historic high-grade gold hits here, for example. And if you listen to the CEO, he says that Rio Tinto, BHP, Freeport, they're well aware of this project and they're following. And as per his own words, they're looking for them to, pierce the higher grade core of a porphyry. So it's like they're waiting, let the junior do the dirty work. If they find a porphyry, if they discover the source, let's say, because a porphyry created this mineralization, and the skarn is again believed to be, that's how it forms, like in the vicinity of a porphyry body. So it's like they're hitting the outer limits of a porphyry system, but I guess the majors, they want, like they will come in and spend, I guess, big bucks once they basically made a bullseye discovery. So this is one I really like from the really, high risk, high reward potential, because this is the drill plan. I don't know if these are also theoretical drill holes, but especially these 5 holes here, for example. If they have, produce a discovery hole, I think all hell could break loose. This is in Utah. There are large porphyry deposits around. Utah got ranked number 1 on the Fraser Institute of last year, the most recent jurisdiction ranking. It's in the US, obviously. So yeah, the more I think about this story, the more interesting it becomes. But it's not like it's. I mean, who knows? Maybe because they need money as well. So it's like they're gonna. I've added some in the open market, and I hope to get a. If they raise, I hope to get a position, but I couldn't resist just adding a few. But this is one where it's like, hey, who knows? Maybe the chance of success is 30% over the next 1 or 2 years that they will have made a discovery. It's just that in case that happens, this could be quite a revaluer. And if I understand correctly, it's like the signs are here that this could be a very large porphyry, that this is a very robust system. So it could be a very large porphyry, or porphyries, I guess, because they talk about, they see multi-phase mineralization, which is great. Sergey talks about, that's what you saw at, the really big ones like Grasberg, I think, Oyotogo, which he was part of the discovery team. He led it, I think. I think they saw multiple phases of mineralization, like multiple episodes of intrusives, let's say, that all just supercharged it. And they're talking about seeing cross-cutting mineralization, so that means there's probably more than one phase. That's great. So, okay, maybe there are some signs that this could be one of those really good, strong, robust, enriched porphyry systems. So this is, I think, one to keep an eye on, but this is absolutely not one I would like any of these that, there's a chance they might make a tier 1 discovery in Utah, so it could be worth billions of dollars, so I'm going to go all in. No, it's like with these cases, it's not going to be necessarily easy. You don't know when they're going to hit, if they're even going to hit. They might hit on this, whatever, they drill this first and boom, everything goes well, they reach target depth and you have 1,000 meters of 1% copper. Or they hit smoke or encouraging signs here, and then they hit on the next campaign after that. So it's like there's going to be a bit of a journey. They need to raise money and all that, but this looks like a really legit high risk high reward target. Whereas again, if you took a 1% position, it's like I talked about in the last video, if they miss, doesn't really matter that much, because your portfolio is down 0.5%. If you have a 1% position and they actually end up making a new massive porphyry discovery, who knows how high the stock could go? Who knows how much value could be created? So even a 1% position in that case could actually produce quite a bonus to your portfolio. Anyway, that's about it. But again, high risk, high reward. Consider me biased. I own shares of all companies I mentioned, I'm pretty sure of. Some are banner sponsors as well, so twice biased in that case. Not investing advice. Juniors are risky. Don't invest money you cannot afford to lose. Especially again, diversification, the higher the risk is always the key. And again, not investing advice. Hit the thumbs up button and leave a comment if there's whatever you have a question or something about, or a topic in mind that would be nice to cover, for example. Thanks a lot. Bye.